I think it's probably a little bit more of the former rather than the latter. We've obviously been traipsing along here for the better part of a decade without so much as seeing inflation, if ever, exceeding the expected target of inflation of 2% established by the Federal Reserve. And so we're still not there at the moment. The Federal Reserve is obviously committed to now more of a symmetrical outcome with regards to hoping that they can pull inflation expectations above a 2% level to eventually allow inflation to percolate up into and above that 2% level. But so far, we haven't
the bond
seen
yield
it.
is not saying the economy is going into a rest, right?
I don't think so. I think the bond yield is reflecting what it typically does, which is to say once the Fed is at or around the neutral rate, the curve tends to flatten out. And that's exactly what we're seeing now.
Nisha, what do you see as you interpret bond yields today?
Yeah, so I would say that there is some concern about long-term growth, right, and sustainability of that growth. You take a look at the 10-year yield now, it's right on top of the Fed funds rate. So that's telling us, and the market is telling us, that short-term rates should be lower. And so, I think it's a function of the lack of inflation, but it also is a concern about long-term growth and the market thinking that this is not sustainable at the rates here today.
So at the risk of overstating this, Steve, and Nisha, I want to get your thought on this too, and Mark as well. At the risk of overstating this, it seems to me that the Fed was pretty attuned to what the market was telling it back in October, November, December, and it acted. Is the Fed, as Nisha just said, going to react to the market right now, which seems to be saying that short-term rates are too high and need to come down? So the end of my question is a rate cut coming?
I think the Fed is more likely to react the other way. I'm thinking that Powell might believe that we gave him an inch and they took a mile, to use a cliche that works really quite well right there. And I think the story is that what you might see is, I think where Powell wants to be is in the middle. I think that's what policy is. There's a gear, it's called neutral, on your dashboard.
We bring up that song, Why Don't You Just Meet Me in the Middle? I love that song.
And I think that that's where he wants to be. And if the market is going to persist in this idea of pricing in a cut, I would expect one of the big three, I'd say Powell, Williams, or Clarida, at some point to push back a little bit and try to move it towards the center.